Just Tesla Semi alone will double the price of Tesla stock according to this chart from Farzad. He projects that this could add $800 billion of market cap to Tesla stock by 2030. So let's see if this is actually likely to happen and if we can find anything that's perhaps missing from Farzad's numbers, or maybe they are spot on. Let's see. First of all, let's start with the number of sales that Tesla would sell. Farzad says 400,000 for 2030 is likely. Let's see. Daimler Truck, which is a separate company from Mercedes, they sold 455,000 units in the year of 2021, with the average selling price just a little bit under $100,000 per unit sold. Daimler owns Freightliner, and Freightliner dominates US market completely, as you can see this in blue. So can Tesla sell 400,000 units globally? I think this is no problem also, considering that the global market is probably about 2 million per year. That's 20% market share. That does not seem unreasonable. And Daimler has more than 22.5% market share in the US. So I think for US, Tesla is probably going to take significantly more than just that. So 400,000 definitely reasonable, especially if Tesla also starts selling smaller commercial vehicles as well. This number is possible to also be higher in the future. Next, average selling price, $250,000. Now, this is where, at a first glance, you look at that and go, 250,000? Really? That's a little bit expensive. Tesla said it's going to be 180,000 for the 500-mile range model and 150,000 for the 300-mile range model, but this was in 2017. Average cost of a semi is $150,000, unless it's high end, then it's over $200,000. So at $250,000, this is well above the standard price of semis currently available. However, the only thing that truly matters is how much is the total cost when you account insurance and maintenance and everything. And Elon Musk in 2017 estimated that Tesla Semi is about 20% less expensive than a diesel truck. Now, this was in 2017, and this was based on 7 cents per kilowatt hour electricity price, which could be more, but also the price for diesel also, it doesn't stay exactly where it used to be. Over time, with everything going solar, we can justify that electricity prices are likely to be low in the very long term where you can have solar power. Whereas crude oil prices long term may not remain stable and swing a lot. And note that this comparison by Elon Musk included absolutely everything, including maintenance costs and insurance costs and everything that you can possibly imagine. And the Tesla Semi is still only 20% cheaper per mile to run than a diesel truck. Now, that still makes a lot of sense to run the Tesla Semi, but still, it's not like you're saving an incredibly large amount of money, but you are saving a significant amount of money. So can you justify charging $250,000 per semi long term? That is a question that we will find out in the future. Short term, sure. Yeah, there's a lot of demand. With 80% of all of the semi trips in the USA being under 500 miles, this will make sense to many operators. If we look at the numbers from Engineering Explained, industrial electricity price in the United States is about 9 cents per kilowatt hour, and wholesale of diesel per gallon in the US is $4.20. And after 1 million miles, the difference that you pay for an electric semi in terms of fueling it with electricity is you only pay about $200,000 versus a diesel semi almost $800,000. So that's a difference of $600,000 over the life of the semi. So the big increase of the price of diesel is really helping the Tesla semi because electricity, it did go up, but nowhere near as much as diesel did. So if you are going to save $600,000 over a period of time while you're using the semi, can you justify paying $100,000 more, let's say, for an electric semi versus a diesel semi? I think you can. I think it's possible. But that assumes that the diesel price does not go down. So if diesel prices do stay relatively high, this is certainly very possible. Next, we have margins. Farzad has incredibly high margins of 50% gross margins for the semi. Farzad specifically asked Sandy Monroe if he thinks that 50% margins, gross margins, are possible for the Tesla semi, and Sandy said yes. So that's how he's doing these calculations. Sandy, of course, is one of the most respected manufacturing engineers for the auto industry, so I think his opinion holds some serious weight here. So I would not want to just dismiss that 50% margins are wrong chart, this chart. 50% margins, I would not dismiss that it's impossible. But the question then is, can Tesla sustain 50% margins? Competitors, I think, would be flooding in over time. And mind you, this 50% is purely just on the semi-sale without full self-driving or anything like that. But then we can assume, let's say, 50% of this 50%, which would give us a 25% gross margin, and the numbers would still be enormous. That would still make Tesla stock 50% higher from where it is today, if this does come true in the year of 2030, and if we just assume that instead of 50% margins, we have 25% margins. But the full self-driving option, it becomes more interesting. Farzad is assuming that it would be a $50,000 one-time payment of full self-driving, which would add $320 billion to the total market cap. This is all these numbers are based on the price to earnings ratio of 20, which you can say that's a low price to earnings multiple if a company is still growing, especially if it's technology related. I think specifically for semis, full self-driving option, once it actually works, I think it's either going to be some sort of subscription or it's going to be a lot higher than $50,000. I mean, think about this. Just $50,000. That's just, you have to pay that much more, actually, oftentimes, to the truck driver per year. And you get this thing, if you pay one time, you keep it for the whole time that the semi is capable of running. Now, the final mile for Tesla semis is likely to be more difficult than for robotaxis. You see, for robotaxis, you just drive to a point and you just wait for the person to come. Even if the robotaxi comes to the wrong place, the person can see, oh, the robotaxi went this way. Okay, I just walk for extra 45 seconds and I'm there. With a Tesla semi, once the semi arrives at the destination, sometimes the driver also needs to help loading the truck and you need to move the truck because, I mean, you need to literally have things being loaded onto the semi. So if you have to move a semi from one place to another place by just, let's say, 20 feet or 10 meters, how do you do that with full self driving? So that's one issue that they will need to think through. But of course, with a robotaxi, you don't need to be that precise. You can be off by 100 feet, and the person will find you no problem. They just might be a little bit annoyed if it's raining. I worked in manufacturing before, by the way, so oftentimes it needs to be very precise how you park the semi for it to be loaded or unloaded. And currently, Tesla's full self driving cannot park the car like at all. Even in a very simple, easy situation to park a car, it cannot do it. And a semi is going to be like 100 times harder with full payload when you need to unload or load it, because you got this massive trailer and so many things can go wrong. So perhaps first we will have a model where full self driving does all of the highway driving and then it stops at a designated place, let's say, and then that's where, the driver comes in to do the final mile basically, or the final few feet or meters, which, that actually may work pretty well. I mean, that would still be incredibly valuable to companies. So if all of the numbers from Farzad here come true, this is combined with full self-driving and the Tesla Semi sales, this would basically triple Tesla stock by the end of 2030 just with the Semi alone. Another interesting thing to consider is that for Mercedes, for Daimler, it is harder to make high profit margins with trucks. Their margins are quite low. Passenger cars for Mercedes produce much bigger margins. However, the passenger part of business for Mercedes has a PE ratio of only 5, while the truck part of the business has a PE ratio of 11. There are a few more things to consider. For example, this one from Stephen Mark Ryan, he said that from an economic point of view, dead truck drivers aren't very useful. He has a point. We, of course, know that Tesla makes the safest cars by far, and I'm sure this would be no exception. Then, if we consider the cost of convoys, if Tesla is able to pull it off, it's going to be completely a no-brainer to get Tesla Semi. Even based on old numbers, when diesel was relatively cheap, it already made sense to how Tesla convoys back then. That's basically, it's cheaper than rail, is what Elon Musk said in that presentation. And also, we wouldn't have situations like this where a semi loses its brakes and cannot stop and then goes at like 100 miles an hour and then bad things happen. Now, this particular case, luckily, it was fine. But this went on for 5 minutes. Check this out. It's a 5 minutes. This was terrifying to watch. Because you would have regenerative braking, this would not happen. Another thing that we have to consider is the incentives for electric vehicles, for semis in the US specifically. The government is going to give as much as $40,000 per sale as an incentive to buy an electric semi. And if you just do quick math, if Tesla sells 100,000 a year in the US somehow, then Tesla, just from the government, basically from these incentives, would be generating $4 billion per year. And Tesla's net income for 2021 was $5.5 billion. So it is quite a large number. And that incentive is good until the year of 2032. And in 2019, Daimler sold over 100,000 Class 8 trucks. So these are what basically the Tesla Semi is going to be. So don't tell me that 100,000 per year in the US is not possible. It's already being done. So even if Farzad's numbers turn out to be too optimistic, what is very clear at this time is that the Semi is going to make a lot of money for Tesla. These are 48 reasons why I only own Tesla stock. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video later. Thank you so much for watching.